Hey everybody, Boris of Forex. Welcome to the crosses section for June 12th to June 16th of 2017. And the story in the crosses really is going to be a cross commodity trade as well as some interesting trades on the majors against both the yen and the CAD, in my opinion. So without further ado, let me just take a look at what my ideas are for the week. The Aussie Kiwi trade, something that I referred to in the other videos, very much front and center because, as I said, if we have contrasting economic results with Australian employment being weak and the Kiwi GDP being strong, there's much more potential here to break that very, very key support of 104. If the 104 support goes, it opens up the run all the way down to 103, and it also, I'll take a look at the chart here and show you how it's a much broader distributed picture here that could return us all the way possibly down towards the 102 lows that we're testing. You really would have to have drastically different results economically. So I caution you from getting too excited about this particular trade. It's still very much a low volatility trade, but we are within that very key 104 support. A very interesting and sort of a stealth development is the Euro-CAD trade, which has been in a distributive mode for quite longer. If you see on the charts, I'll show you, much longer than most people think. And this is really a trade of the decline in the euro as well as potentially an increase in the CAD if the oil prices stabilize. And in many ways, I think this is truly primarily a trade on a bounce in oil. If you get a strong bounce in oil, the translation to stronger CAD and a relatively weak or muted euro could present a very interesting opportunity here to the short side. And last but not least, this was of course the story of last week, but I think it has quite a lot of potential here for a story of this week as well. There are two threats here. One is that the U.S. yields are definitely going to compress further if the Fed is more dovish than the market originally thinks, and cable continues to be under pressure. So this combination of two negative forces really opens up a very interesting possibility here for a break of the 39.50 and possibly the most volatile trade as the week develops. Let's take a look at the charts here and just start with the Aussie Kiwi and show you exactly what I mean. So here's the full big distributive top. Here we did break. If you let me zoom out here, we're certainly getting close to breaking this 103.50 support, right? This 104 is where pretty much where we're at, and a breakdown here, a test of this major double bottom here could be critical. As a matter of fact, I would say if this 103.50 support is broken, it really does open up the full run towards the 102 and possibly ultimately all the way out to parity, although that's a little too far to take a look. Overall, though, you can really see the nice long distributive pattern that we saw over here all the way at the end, and that suggests that possibly there's more downside action in the odd Kiwi. Now, taking a look at the Euro-CAD, this is what I'm talking about, sort of the stealth distribution. Look at this. You would think, though, that although euros had a pretty serious rally, it's actually had a really big distributive move here against the CAD for a good 3 weeks, not even 2 weeks, and now we're dipping towards the lower end of the scale. All of this suggests that if you just simply have a rebound in oil, perhaps to 47, 47.5, that should really weigh positively on the CAD. Euro stays neutral to negative, and we can break this 150 level to the downside and possibly test the 148 as we go to the downside. So technically this is a nice distributive top with some sort of a catalyst here for us to break to the downside. And then last but not least, here's the volatility cross of the week, in my opinion. Pound yen, of course, big move last week as well. Let me just zoom in on this so you can see. Big drop off the UK parliamentary election, but this week the secondary threat. We did, by the way, fill the gap here. So in some ways, the possibility here is just simply to retest the gap. You can't make an argument that it really needs to fill the gap because it really did on this very sharp decline. But the revisit of 39.50, very much a real possibility here. And more importantly, a break of the 39.50 really opens up a full unwind all the way down to 136. That necessitates a dovish Fed, a decline in dollar yen, of course, and more turbulence in the UK political structure. So we're going to be watching this very carefully. To me, that's the big volatility trade here as the week develops. Wish you guys the best luck, the best of trading. Boris, over and out.